When it comes to building a business, to some it's never an easy task to partake, and to some they have very good stories of how they started from scratch and built their empires to profitability. And that's the reason why Bizna Kenya and MC Moments have partnered to bring you Biz Talks. Biz Talks. And here we shall be hosting mentors, people who have gone ahead of us, people who have created these empires, people who have also on the verge of creating these particular big businesses. And these lessons will be valuable for you, the business person, for you, the aspiring business person, the entrepreneur, so that at least you can make wise decisions when it comes to building that business. So every Friday at 8 a.m. on all business platforms, that's the Facebook and YouTube channel, and of course, good morning and welcome to Biz Talks. I tell you, today is a chilly morning. Hibaridi, it needs to be hit down with something hot, and definitely we'll be having some cup of Melvin's tea. But today we take a detour to matters your money and investing. And the person in the house today, Robert Ochieng, is an amazing guy because he has a system that is put in place for you to make wise choices. You know what he told me on the sidelines? Simply because you did BCom, or because you went to, class and did some, what do people do? I think it's BCom, some other studies here. You could be thinking that you know what to do with your money, but unfortunately, you actually need to sit down and get to learn afresh, because rarely are we taught some of the things that we're going to talk about today. So what to do with your money? Before we dive into the conversation, of course, is just to salute our Muslim brothers and sisters. Of course, they are celebrating Eid, and we are together with you on this. Thank you so much for joining us, and welcome, Robert.
Thank you very much, MC, for having me.
Very well, very well. Good one first. I know you're also feeling cold,
yeah.
So I'm going to serve you something hot. And there's a chest here, courtesy of Melvin's tea. I don't know whether you've made a choice already of what you're going to take.
I think I'll go with the green tea and mint.
The green tea and mint, eh?
Yes.
Yeah, right now you need to mint something up, eh?
Yeah, thank you.
So please bring the cup closer so that at least I can pour some hot water here. So how have you been, brother?
Good. Interesting times.
Yes.
For us in the financial services industry, a lot of questions, queries on emergency funds, bitcoins.
Yeah. Absolutely.
So you get to know the heartbeat of the nation in a way, how people are doing. Their worries.
You get to know the heartbeat of the nation.
Yes, you do. Yeah.
All right. So, you caught me off guard today when you talked about let me undo this now for now. When you talked about that, sometimes we think we know a lot because we went through school and did a business course. And rarely do we know that sometimes we have missed on some critical things that we are not taught in life, is it?
Yes, sure. Yeah. So when you look at life generally, what I would say is that we learn so many things.
Yeah.
But at the end of the day, you just need to know enough to get you started. So finance is one of those things.
Finance is one of those things.
It doesn't matter how much you know, but how can you apply it for yourself?
Yes.
And unfortunately, it has been seen as a by the way, but that's not true because we've seen that it is actually part of life.
Okay.
Yes, and at Abojani, we say that finance is actually like your silent life partner. When things are tough, you have an emergency, your phone breaks down.
Yes.
Your money can help you with that.
Okay.
Yes.
I'm having a lemon and ginger because, COVID season, so I have to always try that. But just always know that we have varieties courtesy of Melvin's, just to
fantastic.
Interest you into all that. Eh?
Yeah.
I like that philosophy that you guys have at Abojani, It's a silent partner that you must have always. Now, guys, today is all about your money and investing. And so sit down from wherever you are and ask yourself, if I had a chance to sit down with a money coach, somebody would tell me anything and answer any question about my money and investing. Now you have one. And so all your questions should be directed towards your money and investing. Any question that you ever have. I'll be tackling today a lot on what you may want to know about your money and investing. And I can tell you the truth, we have a man who's experienced right here. And if you want to go check them out, go check their website, what they're doing at Abojani Investment. Thank you so much once again, Robert, for coming. The first question that anybody would ask is, first of all, let us know who is Robert, So when someone asks you who is Robert, who do you say you are?
So I can say, Robert, first of all, I'm a youth leader. I'm very passionate about helping youth because I believe that we are the future.
Yeah.
And my background is in technology.
Oh.
Yeah. So actually technology, I landed in it it was by chance.
Okay.
Yeah, because when I was in high school, I was not very good in computers.
Yes.
So I had to drop it in Form 2. Then after high school, I had a lot of time and said, why not try this computer again? Because life gives people second chances.
Yeah.
So when I went to do computer packages, I got very interested in computers and went and changed my course. So I did Bachelor of Computer Technology at JKU.
Oh.
Yeah, so that's how I started working on technology.
Yeah.
Then over time, during my period of employment,
Yeah.
I worked at Equity Bank
Yeah.
in IT department. Yeah, so we had a project for upgrading the NEC back office system, and I was the technical lead.
Yeah.
Yeah, so I looked at how the stock market works, and I really got interested in that.
Yeah.
Yes, so with that, I went and did the MBA and met other like-minded people. We started a Facebook group called the Young Nairobi Stock Exchange Investors.
Yes.
So that's where it all started. It is a crowdsourcing platform where you can ask any question on investing in money market, treasury bills and bonds, and the stock market.
And by the way, let me jump in now that you have mentioned the Nairobi Securities Exchange.
Yes.
To let the viewers know that you're already now in a partnership with the Nairobi Securities Exchange. Is it what type of partnership is it?
Yes, so the partnership is for broadening financial education. So investor education is a very big theme for the NSE. So we are partnering with them. So in the coming weeks, we'll be offering joint courses with them to try to reach as many people as possible. People in diaspora, we are coming for them. We are going for them to help them invest back home. I know we've been very big on investing in land, but we are saying, why not? Safaricom is here. They announced impressive results yesterday. Yeah. Why not to be a part of that as well?
Absolutely.
Yes.
Well, there you have it. Credibility there, right there, that, you know, tried and tested, and for NSC to really bring you on board to partner together, it means you've got a lot to share and to offer. Thanks for that. I mean, just getting to know you. So let's go to Abojani, and I must confess this. When I first came across the name Abojani Investments, my first thought was, is this a Nigerian kind of thing? I don't know whether you hear a lot of that.
I've heard that like for the 10th time now.
Yeah, you know, they have a lot of abo something, you know. But, you know, just let us know what it means and the inspiration behind it.
Yeah, so Abojani means an oasis of hope, but actually the name itself is an abbreviation of A is African, B is bright, O is oasis, then Jani comes from green.
Okay.
Yeah, so we are a little bit creative there. So that's what it means, I know many people have been asking me, is it Nigerian? I said, no, we just came up with it. Because we always want to be unique. I see people, you find like 10 companies are called Jasiri or Savannah. You see, that's a bit too much.
Absolutely.
So you gotta be a little bit creative.
Certainly, it's catchy, you know, it's catchy in a way. And I like the meaning, goodness, oasis. And we how much we need it now, right now, especially in this desert called COVID. We need to know what to do with our money, you know? So, you know, my first question to you is this, from your own experience and all that, and I like the journey that you're more on the tech, and then you merged it with money, because now we're talking about fintech, finance and technology. So there's a lot of technology coming along with that. We'll talk about that later on. But let's just basically talk about investments. And my question to you is this: why does investing seem so complicated for us, the commoners? Let me use myself as an example. Why is it so complicated?
Okay, I think it is something that is an issue globally. Because even in the US now is when they're starting to have some situations whereby some states are introducing personal finance in high school. So these are things that you need as an adult in your day-to-day life. But they come in much later. So you've worked very hard. Maybe you've attained your PhD or master's, or you're a business person, you are doing well. And the first day you get your first check, is when you start thinking about how do I manage it. And for some people, you can even go 10 years without thinking about your money deliberately. So it is a life skill that you need. So I remember after high school, we went for some life skill sessions that were organized by World Vision, and we learned so many things. People are taught about communication skills, HIV and AIDS, how to carry yourself as an adult, stress management, but no one talked about money. So we realized that it is actually a life skill that you need. So the problem is we've learned so many things, very, very sophisticated things.
Yeah.
We are pilots, doctors.
Yes.
We can do surgeries, but no one taught us how to manage our money. So,
wow.
So our minds are very complex in terms of what we're able to do, but managing money, as we could come to learn, is that it is very simple. Okay. So that fight between the complexity of the world, they've learned things to be always complex, that there's nothing that is simple and easy to do. Yeah. And now merging it with money is where we have a struggle. So it is always a struggle for many people.
That's actually, I think for most people, they should acknowledge. I think the most important thing is to acknowledge that you are limited. Yes. And that you need some extra knowledge in some area, because nobody can be an expert in everything, but you can get a hand and help you. Yeah, and good stuff for what you're doing as well to help people.
Thank you.
Now, the first thing that everybody talks about when it comes to thinking investing is, where is this money? Or if you have this money, how do you even budget in this particular season, you know? And not just this season, because budgeting is a serious component, because you must be able to have that separate, you know, money so that you can invest. And so my question to you would be this, what would be your one-time advice when it comes to matters budgeting to anybody who's watching saying, okay, well, I almost find myself with no money to think about investing because, you know, times are hard and all that. What would be your advice, especially in the angle of budgeting?
Yeah, so first I would say that for managing money at Abojani, we have 3 personal finance pillars.
Okay.
Yeah, so the first one is mindset.
Yes.
Yeah, which is a meeting that you need to have with yourself. It's not MC or Robert that is going to tell you that you need money to help with your personal goals. You have your ambitions, things that you want to do for yourself, for your family. So in the mindset is where you make a connection, where you need money and what it will do for you. So that is very key and is very empowering, because if you know that maybe 2 years from now I need to buy a car or own my own house or take my children to school, then it becomes very easy to work backwards, because you begin with the end in mind. Yeah, so after getting to decide on why you need money, maybe because you want to beat the inflation rate. Yeah, I'm seeing people saying that the cost of a loaf of bread is going to go up, things like that.
Yeah, 10 so, man, that's a lot of money.
So it's going to be like 3 times the amount of money used to buy a loaf of bread at when I was in high school. Yeah. So about 17 years ago. So you can see, because of inflation, the price of goods and services are going up. So again, you need to invest. So once you make those connections, things like retirement, if maybe now your parents depend on you and you don't want to depend on your children, you make a case that then I need to set aside my money.
Absolutely.
So that is what builds into budgeting. So you have to know your personal values, know why you are saving first. Yeah. Yes. So once you have that, then it becomes easy, because you are living your story, a story that you are the one who have written, and it becomes very easy. So he said for budgeting, as you do it, saving, there's a debate on the difference between saving and investing. Okay. And for me, I think that saving, actually, it happens in the mind. Yeah, you can decide that I'm going to do YOLO and spend all my money. So you've not decided. But once you decide to save, it happens in the mind, then you can write it down so that when the money comes, you know where to put it aside. So that process of setting money aside could be both saving and investing. Whereby investing at Abojani, believe is that you put your money in investment plans that will give you returns above the inflation rate. Okay. Yeah, because if you had 20 Kenya shillings maybe 20 years ago and you put it under a mattress, by then it could afford a loaf of bread. Yes. But now it can't. But now so it means saving has not helped you. Yeah. But investing can, because it beats inflation rate. So it helps you to maintain, or at least to level up your purchasing power and improve your lifestyle. Yeah. Okay, that makes sense. And you know, I'm going to ask you anything that crosses my mind today about money, because just still on the budgeting. Yes, still on the budgeting. Yes, still on the budgeting. Yes. After you've now decided, because it is a decision, you have a meeting with yourself, and usually tell people that the best things are things that come from inside out, things that come from you. Eliud Kipchoge said that only the disciplined are free. Yeah. Because you've said, I'm going to do this, and you've done it. Very empowering. You live a very fulfilled life. So once you've decided you're going to do that, the second pillar is the skill set. With this budgeting, again, it's not just budgeting that I need to save 20,000 Kenya shillings or 50. Where do I put it? And you need to be the driver and take yourself to the financial markets.
Yeah.
Not the other way around.
Not the other way around. Don't wait for them to come.
If you are not the driver, you'll be driven. So you'll be on your way going to work, someone stops you with an insurance cover or plan, then you buy it.
Okay.
You buy it first, then tomorrow you start asking yourself why you did it. So many things.
Okay. I like that. I like that. And I think my takeout from what you've spoken is there must be a drive of the why you're doing this.
Yes.
Because that now will inform why you need to save, and because you have a plan ahead and a goal ahead that you need to achieve.
Yes.
Is it?
Yes.
Excellent.
So now you bring in the skill set pillar where you know the things that are out there.
Yeah.
You know that being listed on CRB can impact negatively on you, so you need to pay your loans.
Yeah.
So those are the skill sets. You know how money markets work, shares, anything that you want to buy, real estate, how they work, and the kind of returns that you expect.
Yeah.
Then finally you need the tool set, because you know that as human beings, for some reason we self-sabotage. So that means that you need the tool sets like the budget, where you write your name down, and the dreams that you have for yourself, the aspirations. They may be 10, but you have to prioritize and start with something.
Okay.
Yeah, so that's the journey. So the budget helps you that things like standing instructions or check-off system, whereby if you are employed, that money comes directly from the payroll to the third party. Just like the way you pay taxes, NHIF, NSSF, when it is automated, it becomes very easy. So those are the 3 pillars that you need to work on for you to be financially literate. And once you master them, it will become very natural as walking, sleeping, and any other things that you do.
We'll talk about that masterclass, because, you know, I'm already converted. But, you know, basic question.
Yeah.
You know, somebody is watching and saying, must I invest honestly? You know, and I'm sure you have an answer for that, because I want anybody watching to know why it is important to think about investing and your future. Please tell them why it is important.
Okay, we usually say that investing is the goose that lays the golden eggs. Yes.
Okay, good one.
Yes.
And those are the golden eggs that will make money for you. Absolutely.
Yeah, look at what M-Pesa is doing for Safaricom. They
Big
invested, so the money is just coming every minute.
Every minute you're making them rich, absolutely.
Yes. Yeah, so because they invested, and the same applies to us as individuals. Yeah, so these companies, they sit down, they organize their budgets, they have their strategies, what they want to achieve.
Yeah.
Then they're able to achieve them because they're organized and they plan well. So the same applies to individuals. So we can have different reasons for investing, but there are some universal reasons that should help us. They're like a wake-up call for us to think about investing. So first of all, we look at an emergency fund, whereby is a life event that would require financial intervention from you. So maybe the car's broken down, several issues. So you need that, and COVID has taught us that. So they usually say that times of crisis or distress, they teach us about tradition. So tradition is something that you can ignore on any other day, but when things are really thick, you go back to it. Okay. So you've learned that an emergency fund is key. So when you invest, it means that you are generating more, and that can act as an emergency fund. All right. In terms of this.
Because of course, definitely there are tools you can invest on, and you can always get the cash when you need it. Is it?
Yeah, in terms of liquidity.
Okay.
So another reason why you need to invest is that someone said that while earnings or income is not forever, expenses are forever.
Expenses will always be there.
They'll always be there.
Yeah.
Yeah, because generally people work up to, let's say, age 60.
Yeah.
And these days, because of innovation in the healthcare sector, people are living slightly longer. Yes, people are living longer. So you might be here till 90 and 80.
And so if you retired at 60,
you still have another 20 years.
20, 30 years there.
Yes.
Wow.
Yes, so when you are young, we talk about human capital. You MC, you can moderate sessions. You are young, you can do that. You might not do that at 80.
Absolutely.
So that's why human capital needs to be replaced with financial capital. And the financial capital will be on your side helping you with your daily expenses in your retirement. So you need to set aside some money now. And statistics show that 83% of Kenyans who have attained retirement age, they're not ready for it. So you have to rely on our children to be our retirement
children become
package.
your retirement plan.
Yes, so or the 2,000 Kenya shillings that government gives to the senior citizens. Yeah, things like that. Yeah, or the society. So it's very, very important to make that connection. And there are personal goals. for you to live a fulfilled life,
Yeah.
you need to be achieving some of your personal goals so that
Yeah.
you feel like you are doing something for yourself. Because people ask themselves, I've worked for 10 years, what do I have to show for it?
Yeah.
But if you have money and you invest and you use it somewhere, you can say that at least I bought a car, I bought a house, I've started a business, I've taken my children to this school. So you need investing also as a key pillar in life, and it helps you in case you lose your job and you have done some good investments that are liquid.
Yeah.
That can sustain you and take care of you.
Absolutely.
Yeah, and also investing is key so that it helps you to live within your means, because it creates that discipline.
Yeah.
Yes, so when you are investing, you'll be on momentum. You'll always know that, yes, I have this money, and within my budget, I've portioned money for entertainment, leisure. All those can be catered for in the budget. Then these ones, it is my money working for me.
Okay.
Yes.
Fair enough. I think you are converted now why it is important for you to invest. You know, even the good book says that a wise man leaves wealth for their generations. Not the other way, not eating from your kids, you know.
Yeah, and that's a struggle that I have with us as a country.
Yes.
I want to convince us that please, let's look inside. That
Let's look inside.
If you are to start a business as Robert's son,
Yeah.
Robert, your father is the one who's supposed to fund you. Yes, so that's why most startups, they start with friends, family, and fools. The people who just believe in you for no reason.
Yeah.
If that is not there, then we need to have a situation where you have generational wealth,
Okay.
which creates family funds that can invest in startups. Yes. So if we have that, we'll stop these social media fights of some people are being funded because of their skin color. There's a lot of money already here in Kenya. So you just need to invert the way you look at things and know that actually within your family lineage, you should try and help your sons and daughters start businesses. Then once they're able to scale, now outsiders will come. People like MC and Robert will come because already you've started something and you can see growth.
Wow.
Yes.
If you're a parent and you're watching, you have had it well, please change this cycle.
Yes, for the daughter and son to start a business.
Okay. Now let's get and dive in now to, investments. Because, the usual, there's a lot of thinking, and I asked somebody to send me whatever question they may have about investing. This is what they said. Are we doomed to think of just buroti, maguta, and kabiashara? What is the range of investment opportunities from where you sit as Abojani? What do you see, Robert?
Yeah, so for investing, usually we are supposed to look at things from different levels.
Yeah.
So first of all is liquidity. How liquid is the investment?
What do you mean by liquidity? Some guys are going to fight me because we need to explain to them in the slightest, in the easiest way for them to learn.
Yeah, so liquidity is just how easy is it to cash out the money. So if you have money in the bank account, you can easily cash it out. So that is very liquid.
Okay.
But maybe if you have a piece of land and you try to sell it, it might take more time.
Okay.
Yeah. And also if you have money out like debt, getting it back might be a problem.
Okay.
So it means it might not be that liquid.
Okay.
So liquid things are basically in investment options where you can easily cash them out.
Lovely. For my friend Mickey, who's through that question. Yeah. So it's very easy to convert it when you need it. A piece of land before you sell it takes time. Sometimes looking for a buyer. But money somewhere, how easy can you get it back if you want it? Is it?
Yes. So lovely. The second thing is also the investment time horizon.
Okay.
Yeah. So if let's say you invest in Safaricom, you can't demand returns like today or tomorrow. Yes. Because the way they plan, the new CEO just came in last year in April and is now expressing himself through his strategy. So it is going to take time. Yeah. So it means that if you have a longer time horizon, then you might want to look at such opportunities. Yeah. But you have a shorter time horizon, you could look at things like treasury bills. Yeah. Or you could look at money market or fixed deposit accounts. Yeah. So you have to look at your investment time horizon when you need that cash. Yes. If it is cash that you need 5 years from now as a down payment for a mortgage, then it means that you can now align with investments that have longer time horizon. Okay. So that is very, very key.
Time horizon.
Yes.
Good one.
And in terms of the portfolio, we usually say that diversification is the only free lunch in investing.
Is the only free lunch in investing?
Yes.
Diversify.
Yes, diversify. So it will help you to have a portfolio with different types of assets. So they are generally called asset classes.
Yeah.
Like shares, that's an asset class. Real estate is an asset class.
Mm.
So you also need to know the nature of that industry and understand it from an economic point of view. So we know that if the treasury bills and bond rates are very high, that might not be a positive thing for the stock market.
Yeah.
Because people will find it easy to just get good returns from the treasury bills and bonds.
Okay.
Yeah, and we also know that in the economy, in distressed times like this, then real estate might not be very attractive because it is a form of luxury in a way. The things that you do after you've met your bare minimum in terms of the food that you need, transport, moving from point A to B. So that is very, very important for you to look at. And also physical assets like land, on the other hand, they are good in terms of over time they've been seen to beat inflation. So it's also good to have some physical assets. But it is not the only thing. Because you can be cash rich, sorry, you can be asset rich like you've said, but cash poor. It's possible to have 40 pieces of land all over.
But you're broke.
40 acres, but you are broke. You can't even afford dinner. Or, yes.
It makes a lot of sense.
Yes, so it's important to mix them. And the way things are going, things are moving away from the physical things. We have a concept known as tokenization, whereby I might not need to own a car. I might just get an Uber to move from point A to B. Real estate, you've seen that now you can go to Mombasa and be hosted in an Airbnb. Yes. So I just use it when I need it. Yes, and that is the reason why now technology companies like Apple, they've overtaken traditionally physical companies that rely on oil like ExxonMobil. You've seen here in Kenya, technology, Safaricom. I put in some credit, 10 Kenya shillings, and call when I need. I don't have to own that telephone booth or whatever extension that people used to have before.
Yes. So I think what you're saying is that the sea is wide when it comes to thinking matters investment, and someone needs some guidance definitely to know where to jump in. But I think it's also looking at what is your, I think you used the word diversification first of all, that you need to, diversify your investments. And, you've mentioned several, from treasury bills, I've heard of that. And I know there is also matters to do with shares. So not just that one way that we've always known, kabiashara and something else, is it? So let me just pin you straight, and I'm going to go practical a little because somebody needs some help. Let's assume January till now, I've managed and hit and tried to squeeze in myself and saved. That means I've gone through all the lessons you've talked about. Budgeting, and now I've managed to save some money, and I have a 50K, here is the money. And I'm like, now, Robert, I have 50K. What will be your advice with this money before I consume it?
So the first thing usually we say that you need to play defensive first. Yes.
Play defensive.
Yes. If you are defensive, it means that you can live to fight another day.
Yes.
But if you are only offensive, that might be the end of you.
It might be the end.
It might be the end. And COVID has exposed even some companies that were just offensive.
So much. Yes.
So defensive means that first we look at protecting what you have. And you look at what can go wrong. So it's always good, before you invest, that's when you have the luxury to make those decisions. So defensive, you look at things like protecting your family from unfortunate events. So you need first to look at things like insurance. You need to look at an emergency fund. So an emergency fund is number one. So it is very, very key. And people are advised to have between 3 to 6 months worth of their monthly needs. But over time you could extend it to 10 months. Even 2 years, because you've seen that these days you could lose a job and it takes 18 months to get another one. So that is the defensive part. Then once you've looked at the defensive part, you now look at the financial markets, starting at the low risk investments as you learn. So we have things like money market offered by companies like CIC Asset Management and Britam. They are very good in terms of building that saving and investing culture, and they give you returns above the inflation rate. So you start from those, then over time you can even use those interests that you earn from this money market now to try out shares.
All right.
So it is a journey. It is a journey because if you get dividends and use it to invest in shares and something goes wrong, your principal is still there. That's why you say that goose is still laying golden eggs.
It's still laying the golden
you
eggs.
still have an opportunity to start that kabiashara that you want.
Yeah.
Because someone once told me that there's a Kenyan proverb that says that the matatu business seems to be doing very well for everyone except yourself. So also business is not easy and straightforward.
Yes.
But with the golden eggs that you get from that principle,
absolutely,
you can try out new things.
Okay.
Yeah, so it's very good to look at the assets that are outside there. They are low risk and high risk. So you start with the low risk as you build your investment acumen and you learn, and take time to learn.
Okay.
Yes.
So, you know, you've talked of some areas, and one of it, there was money markets or shares. You know, first of all, be defensive, you know, play defensive, that's the word, so that at least you don't lose all your money. And we have had people cry. Like I saw a story yesterday of someone who even sold their home so that they can go to those, a particular investment, but I don't want to name it, and then they lost all the money, and you're wondering now, what was that? I think that was not a wise decision. Now, money markets, how do they work?
So money market, the way they work is that they are pooled funds that are run by asset managers. So they are professional fund managers. So they take away that stress from you and manage the funds on your behalf. So there also you have a checklist. So you have over 18 of them, and that list is available on the Capital Markets Authority's website. But I think it is always safe to go with some of the established ones like CIC, Britam. Those ones that are backed by big and established organizations. So the way they work is that they pool the funds, they invest in some liquid assets like treasury bills and bonds, fixed deposits, commercial papers. So they make those investment decisions on your behalf. So all you need is to approach one of the fund managers, then you open an account. So in Kenya, I think, to be honest, only money market funds have done well over time. I know you have others like balanced funds, equity funds, all those, but money market, there's an element of capital preservation, which means that your principal is guaranteed, then you get an interest. So that interest, it will incur some 15% withholding tax. But the good thing is that the interest that you get in month one, it is added to the principal, so it becomes the principal plus the interest becomes the principal for month two. So that's where we talk about compounding, so that over time, the interest that you're earning is also earning interest, and it is working for you. So we say that investing is the highest form of earning money. Yes, because it is passive.
Don't just keep the money. My goodness. Peter Macharia, Benjamin Chariot, thanks for your comments. I'm going to be talking about them in a moment. And if you're watching, let us know that you're watching, and even from where, so at least we can give you a shout out. Now, you know, we are really trying as much as possible to get to understand in the simplest language about matters investing. And, you know, before we get to what people are saying online, let's talk about strategies now. You know, just advance the conversation now that we have, you know, gotten to know where to invest, how the money market funds works, shares, all that. Are there some strategies that people should adapt to, you know? And I know people are saying, my goodness, this is going to be a lot of work on my end. Let me just tell you, that's why you have Abojani, and they can always train you and help you. But for now, are there some strategies that you have seen, tried and tested, that people adapt to, so that at least they are consistently, at least on a positive path when it comes to investing?
So first of all is to look at where the money is coming from. Yes. And that is just understanding the concept of capital. Yes. So for example, if you take a loan and you don't pay it back, it simply means that you have zero understanding of what capital is. So capital means excess, and it is excess from someone. So for you as an individual, first is to understand the concept of capital. And we'll talk of capital in this case, since we are talking about money as finance or money. And you say that money as capital is a byproduct of two key things. So first is the mental capital, then social capital. So however great I am as Abojani, if I just keep everything to myself, no one stays in my head, no one stays in my computer to know what I'm doing there. So I need that to be known out there. So first is to get a skill or something that you are good at, so that can create value. You are the mechanic to be the go-to mechanic where you work. So if you are an engineer, medic, that's a skill set. And you also need to build it over time, acquire wisdom from people who have done better than you, you learn. and you get to be known out there on
So
Instagram.
get your source. That's what you're saying.
Yes,
Wow.
yes. Socially, let your family members know that you're good at computers. Their friends also need to know that.
Absolutely.
Associations, professional associations, they need to know that this is the person, this is the computer wizard that you have in the room.
Lovely. That's a
Yes.
good step. Get to know where the money is coming from.
Yes, so socially, you need to be known as well. Network, create a good LinkedIn profile.
Yeah.
Digital footprints are key. Someone might do a search and land on you.
Yeah.
Then they ask for your services.
Absolutely.
So once you have that, then you create an abundance mindset where you see, what more can I do to become a better me
Yeah.
as a professional or as a business person? So that is what will elevate you. It will elevate you so that you're able to earn more.
Yeah.
People can be able to see more value from you. Yeah. So once you have now the take home, you now budget for it. And we usually say that in budgeting, we look at 3 pillars. So there are needs, self-development, then investment and savings.
Wow.
So needs are what you need for the bare minimum. So just think of that COVID situation when you had lockdowns and you had to stay at home the whole day. Those are the needs.
Yeah.
The things that you need on the bare minimum. A roof under your head,
Yeah.
something to eat.
Yeah.
Those are the needs. Maybe airtime, those are needs. Then self-development is something that you can ignore. You can choose to ignore, but it will catch up with you. For example, you need to keep fit, go to the gym. You need to do more for your business.
Yeah.
Learn more about marketing, sales, so that it becomes bigger. Because we are talking about increasing the size of the cake.
Learning never stops.
Learning never stops.
Yes.
Networking.
Yeah.
Yes. Calling people. And budgeting is also about time. Budget for your time.
Yeah.
If you have problems remembering when to call people, you can set an alarm.
Yeah.
Saturday at 3 p.m.
Yeah.
Sunday. Call people that will help you in future.
Yeah.
Yeah, abundance mindset is being strategic, not being needy, whereby you only call people when you need them. You need to be smart. You plant the seeds now so that when I see your call tomorrow, I can answer it and be of assistance to you. So when budgeting, you need to do that. Then you also do savings and investments.
Okay.
Yeah, so once you set that, it is very easy to set yourself on momentum and look at the goals that you want to achieve. Because you have to make a bigger connection for you to be able to be consistent.
Yeah.
And they always say that time is the best friend of any individual who is investing.
Yeah.
Yeah, so a quick review, let's say that there's someone who has worked for the past 10 years and they could afford to save just 10,000 Kenya shillings per month. So in a year, that would be 120,000.
120,000. Good money.
10 years, 1.2.
Yes.
So again, we can ask ourselves, those who have worked for over 10 years, where is the 1.2 million? And it could be higher if you are investing it, let's say, in money market.
Right.
Yes.
Yeah.
Yes. So it's about being consistent. So if you get those hacks and you try to automate them, things like standing instruction, but also beware of charges. So if, let's say, you are in a certain circle and it banks with Coop Bank, it would be wise for you to receive your salary through Coop Bank.
That's true.
So
there are no charges being cut
automatic on. And also there are no more charges. There are not a lot of charges for you.
Yeah.
Yes. So once you are strategic in that and you automate it, it will be requiring zero effort from you.
Absolutely.
But it will be doing so much for you. Because again, money doesn't want a lot of noise and a lot of activities. Because if you overthink, is when you make the biggest mistakes about
Lovely. I hear you talk a lot about mindset. There's a lot that needs to happen on our minds, absolutely, is it?
Yes.
Now, let's talk about things that you've observed, mistakes that you've seen people make when it comes to investing. I know there could be many, you have mentioned a few on the way, but are there some that you see and you're like, oh no, you should have sought some advice, you know?
Yeah, so mistakes, I would start with mine.
Yeah, it would be nice. Make it personal.
So I think I always thought that it will reach a point where I'll be earning a lot of money, like crazy money.
It's the story of many. I also want
saving whether it is 1 million, but that day will never come.
Yeah.
So you need to start from where you are. And we've seen some people who we think they're doing jobs that are not paying very well, but they've managed to take their children even to very good high schools, universities. While people are earning very well, they are struggling, surviving on school loans. Yeah. Wow. So that mindset is key. And your first salary, if you're able to plan for it before it comes, because for me,
you did.
I can't remember where it went.
You know what we say.
In fact, I had to borrow money because I knew that now in the second month there's some money that was coming. So that's how it starts for most people. And in my case, that happened. And again, there's this thing called YOLO. So I had to
you only live once.
Coin a new term known as yo-yo.
What is yo-yo now?
So yo-yo is you are on your own.
Oh.
You can spend all the money that you want today, but let me tell you, if you have an emergency now, there's no single person that is guaranteed to help you. Not even your parent, not your sister or brother. You are on your own.
Okay.
Even during your retirement age, you'll be on your own.
Is that yo-yo or yayo?
Yo-yo. So you are.
Oh, okay.
So you are is one word.
Okay.
You,
on your own. Okay, makes sense.
So yo-yo. So it means that you need to plan, and you can still have fun because within the budget, let's say someone is earning 50,000 Kenya shillings, they can say that 5,000 is for leisure, is for entertainment. Then maybe 10,000 they're saving. So there's no excuse for not saving or not having fun. It's just about planning for it. So it's very, very key, because if you don't plan, and I've told you, if you're not the driver, MC, be guaranteed.
Absolutely.
There are so many people there who have an idea of people who are earning. And they'll be on your case. They can be friends, relatives. They can be people in the financial services industry. They'll do the things for you, but before you realize, you learn that those things are not aligned to your goals. So you need to be in charge. So that's very key. And the things that we call IOPs, which is impressing other people. So let's say that the person whose job is to impress other people, they are very disadvantaged because they're actually more likely to suffer some form of mental illness. Because they're outsourcing their happiness. So IOPs is where now you start to live beyond your means. Then you invite a friend known as debt. Which can cause a lot of stress.
Debt. You're right. I have a friend who I can't mention here, who told me they got trapped. They had all the apps that lend money. They would take from here, pay here, do here, I don't know. And he said he was trapped for some months until he had to sort of get help.
Talking about apps, I can say that the person who taught me computer packages gave me the best foundation when it comes to technology. You're supposed to look at the bad sides of technology first.
Start with the bad side.
Every product and service that you have outside there, look at the bad side
before you jump in.
And they told us that computers can make people lazy because you can have deliveries coming to your house, so you don't work, you don't get fit. So you need to know the bad side so that you balance. So the apps come with what we call availability bias. Since it is easily available, let me do it. Yes. So you need to know the bad side or the dark sides of those apps. And access has a disadvantage. So there is no data that has shown us that since we now have more people who are banked, who can access financial services, that we've gotten richer as an individual, at an individual level because of that. So access doesn't necessarily mean wealth. It can actually mean that now you're able to spend more. So you need to understand money, and you need to understand the enemies of money.
So look at the bad side. My goodness.
So velocity is created by those apps. So those apps, they thrive on velocity. But wealth thrives on store of value. Money that is just seated there and relaxed. So you need to strike a balance. So the mistakes, some are externally driven. That's why you need to stay guarded. We can never be perfect. There will always be those temptations. And there's something that I learned, that we are very susceptible to spending money out when it comes to investing, especially in scams, because of the thrill of the possibility of making those quick gains. So I can come and negotiate with you that, why are you selling for me this cup of tea at 50 Kenya shillings, I have 20. That's when we are consuming, we negotiate. But with wealth, once the story has been sold to us, we don't do any due diligence.
Think twice.
You
jump
just put in the 1 million in the greenhouse project. Then now you want to invite people who are not there when you're making that decision, making life very difficult.
There are so many people. You mentioned greenhouse. There's a story already. People have lost millions. Goodness.
Yes, so we need to know some of the areas where we can make mistakes and stay guarded. We won't be perfect, but at least we can avoid some of them, because they are known issues. And again, in the financial services industry, when you look at the way capital works, the central banks do financial intermediation, and they give people capital at only 13%. So if someone wants your capital at more than 13%, again, you need to know that you are taking slightly higher risk.
Yeah.
And you need to consider whether that's something that is worth it.
Yeah.
And whether you're only going to put maybe 10 or 5% of your net worth and not everything. Yeah.
Can I ask you this, Robert? And this is also very personal.
Yeah.
Because, yeah, you have to do your homework so that you're not just jumping in, you know? You have to at least see what is tried and tested.
Yeah.
But there's also the element of there are new things coming in day and night, for example. And now I'm jumping into the cryptos. So people come and say, you guys, you know, Bitcoin, some years back, I heard about it, you know? I think I was supposed to buy it at about 10,000 shillings. I'm thinking, hello, are these people okay? Something, I don't know, is being mind where. That was my mentality then.
Yeah.
Today, when I look back and I see some of the value, if I bought then, I'm thinking, why didn't I jump in? So I know you're saying you want to be careful. Of course, there are places where you can really try and see this was tried and tested. But as I say, there are more opportunities popping up, you know. How do you balance that so that you don't jump in and then make mistakes, and then you also want to jump in so that at least you can reap with the others and you're happy? How do you marry these two?
Yeah, so first, let's talk about the concept of risk.
Yes.
So I think life is all about taking risks. Okay. Otherwise, you'll never be able to do anything. So risk, there are two levels where you can sit down and decide that for you or for me, my risk level is low. Yeah. So I'm only going to save 1,000 Kenya shillings for retirement per month. Yeah. But when it reaches my retirement age, that might not help me. So it means that I took too little risk that would not be able to help me to achieve my personal goals. So to achieve your personal goals, you need to take some level of risk, especially when it comes to growing wealth. Yeah. But still you need to first of all respect risk. Respect it. Yes. And know that investing is actually risk management. Yeah. Yeah. It is risk management. Yeah. Yeah. So you need to, that's why we say you look at a portfolio. So if Robert owns X, what I own is 100%. Yeah. I don't know what will happen to me when I lose everything. Maybe I would even change my walking style or even how I talk. So that's why you say don't try. Yes. Don't. They usually say that nowhere you can get killed and don't go there. Yeah. So that's why portfolio management is key, so that you balance and know what type of risk you can take. Yeah. And if you can just try with 5% of what you own, if things go wrong, it won't affect you much. Yeah. But if it works, well and good. Well, so we call such investments wildcards because they have low probability, but they have high impact. And high impact is two ways. Go on. So high impact means that it can really become big for you. Yes. But it can also bring you down. So if you put a lot of capital, your retirement package there, someone put, I think 20 million Kenya shillings in one of the crypto scams and it went. Yeah. What if they put only 1 million Kenya shillings out of the 20 million? Yeah. If it worked like now, Bitcoin is multiplying in tens. Yeah. So maybe that in itself would be 20 million. Okay. But if they lost that 1 million, it would not have affected them much because they have another 19. Okay. So that's how you need to look at investing. Yeah. You look at the various investment options, the kind of returns that are there. And for new things, we usually say that you need to learn fast and don't go all in. Okay. Yeah. But you should know that people take advantage of the thrill of the possibility of winning. So that's why things like gaming are very big, because that thrill can be overpowering. So it's very good to stay guarded and know that I need to be defensive first. Defense. So you've seen people who watch football. Okay. People who watch football, you know, like Jose Mourinho, his philosophy was built on defense, but he still won. But there are teams that, you know, they're very good at scoring, but they can't defend. So you need to balance. Yeah. And the companies that are going ahead, getting ahead now, they're the resilient ones that kept some things during the sunny days. Yeah. So during these times, they're taking advantage, even buying distressed assets. They're growing. Big companies like Facebook, they employ, their staff number grew by 26% last year. Okay. So they're employing now 60,000 people. Yeah. Yes. Because on the good days, they're able to save more. So it's very, very important to respect risk and take only risk that you can manage to absorb if things go wrong. Yeah. And also it's important to know that things like don't borrow to invest, try to avoid that as much as possible and invest only in what you know.
Okay.
And what you know is not attending a clubhouse or a Twitter space chat.
No.
So look at very, very structured courses or lessons where you can learn something on an end-to-end basis. And you can even ask questions, and preferably from people who have done it successfully.
Yeah.
Yeah.
Wow, lovely.
So it's not just about hearing that this is the hottest thing. The best thing, always go to Google. If you go to Google Trends, you'll see the hottest topics. Usually those are not some of the best to get in. That means that you are joining a party on Sunday morning when the dance was in the previous night. So you are late to the party.
Wow. So, you know, we have about, let's just spare this for the people, but I think you've explained it so well, and I love the fact that, you know, these are critical lessons that everybody needs to know. Just do your homework. Do your homework. I think there's a lot of doing your homework, and don't just get in and dive in, you know. Questions are many, thick and fast. Thanks a lot, guys, for sending this. Andrian, I'm listening. Good. Yeah, that's my friend. He's saying that he saw there. Bungo Paul as well, he's following. Thanks a lot for following. Samir Munchi says, what percentage of your savings, I think, can you invest in capital markets, or what's the interest per annum in current scenario or 10-year spectrum? I think that question is quite complicated in itself, but I hope you get something out of it.
Yes.
So I believe he's asking what percentage of your savings you can invest in capital markets, because now, assuming that he has saved, so what percentage? And then his part two of the question is, what is the interest per annum in current scenario or 10-year spectrum? I hope you get something from what he's asking, but what can you tell him?
Yeah, that's a very good question from him. So I think the first thing that we need to look at investing, we talked of time horizon.
Yeah.
So if you have a longer time horizon, it also means that you can take slightly more risk.
Yeah.
And it also means that you can invest in things that give returns in the long run.
Yeah.
Yeah. So in terms of interest rates, I would say that money markets, where you can start, the interest rates are between 8 to 11% currently in Kenya.
Okay.
Then have treasury bills, 364-day treasury bills, the returns are at around 9.4%. Then long-term bonds now, we are getting returns of as high as 13%, 13.6%. Yeah. So that's where now you look at your portfolio investment time horizon and what you can set aside in the long run.
Yeah.
Yeah, which is very, very personal in terms of percentage.
Okay.
Because you might find that in the short term, there are things that you need to do, so you need to be a little bit liquid.
Yeah.
Then you can only spare 30% or 15%. But over time, once you've done the project that you need to do, you can spare more, let's say up to 40% or 50%.
Absolutely.
Yeah.
Absolutely.
Then now when talking about the stock market, the stock market usually have some myths. People say that Nairobi Securities Exchange is not doing well.
Why are they saying that? That's a myth.
That needs to be replayed so that if it is me, I listen to myself. You are not investing in Nairobi Securities Exchange. Investing that way means you are hugging the index. So that means that you are buying all shares, but that's not the case.
Yeah.
Still within that exchange, you need to look at some of the best companies. And we've seen a company, a fund manager in the US that has created a portfolio that has earned an average of 12% in the last 10 years. Yeah. Still within Nairobi Securities Exchange.
Wow, that's good.
So there's also a skill set that you need. So if you look at a company like Safaricom, since April last year, it has given investors returns of over 45%. Yes. So that's why I say within that market, you need to look at the demands, where things are, how the companies are run, something we talk about in our masterclass, financial statements, so that you invest in places where you are likely to succeed.
Absolutely.
Yes.
And I'm sure for you, Samir, if you have questions, you have some money, if you come to Abojani, you will help him, is it?
Yes.
So that they can know where to invest, is it?
Yes.
But then can I throw in a question that I want a quick answer on? On all these matters, stocks, markets and all, what's the safest tool to invest on? For people who are so, the word is risk averse, you know, they have very low risk appetite. You know, I don't want to lose my money. What would be the safest? Okay,
currently in Kenya, the risk-free rate is based on the government bonds.
Okay.
Because the government of Kenya has never defaulted. So we're not saying that they won't default one day, but as per now, because that's what we use.
Okay.
Yeah, so the risk-free rate should be the long-term government bond, which gives around 13% now.
Okay.
Yes.
Let me just get into some of the comments here because of time. Peter Macharia, managing money has to start at an early age where we need to train our children how to use their piggy banks. You agree?
Yes, I agree. And that's where now I have a very controversial statement.
Yes.
That financial literacy is actually only for children. Yeah.
Hey, qualify your statement.
For adults, let me tell you what happens when you find yourself in a situation whereby you have some drug addiction. Where do you go to?
Wow. Wow. Goodness.
Where do you go to? A rehab.
Absolutely.
Yeah, so if we find ourselves, we are 35 and you don't know about money, it is such serious. It is like you need to be in a rehabilitation program to manage your finances. Because the children, they have the luxury of learning and internalizing. But for us as adults, maybe we've grown with those bad habits. So we need a very intense program or an intense approach if we are to make a drastic change. Otherwise, we'll be overwhelmed with the debt.
Okay.
Yes, which are quite accessible. So it's also something that people can look at a personal level and see your situation and how you can help yourself.
Okay.
Yes.
Thanks, Peter, for that. Benjamin Chariot, following and liking every bit of this conversation. Follow and like Abojani, definitely. He's already a fan for Abojani. Charles Okodo, following this, keenly need to have coffee with Mr. Ochieng to learn more. Absolutely, Charles. You can always get in touch, is it?
Yeah, so the two great things about Abojani is great mint and availability.
Ah.
Yes.
Lovely. Charles, they're available. Neville Matoro. Ochieng, how can I get one-on-one talk with you? By the way, how can they get you?
Yeah, we do have those sessions.
Those sessions, right?
Yeah.
Absolutely.
Yes.
And you know, we're going to talk about your academy right away and at the closing.
Sure.
Let me first of all get into some of the comments. So Neville, just stick there. Lucy Chemos, watching from Nairobi, a lot of wisdom here, joining the class very soon. Absolutely, Lucy, and I think it's the best decision you can make to join into the class now. Neville is actually watching from Qatar. Wow, thanks a lot, and keep checking up. Geoffrey Nyanyuki, what do you advise people who are in diaspora? And I know there's a lot of conversation about what you're doing with international clients. What would be a quick statement on that? In terms of answering this, how you advise people who are in diaspora?
Yeah, thanks for that. So for people in diaspora, we've been working with them and we'll continue to work with them.
Yeah.
So what I can say is that there are two things, because these are stories that they've told us.
Yeah.
They're not coming from me. So they've said that they've had issues when they're investing back home in some asset classes that need people back home to manage for them. But we are telling them that the capital markets, you can actually open a CDS account and invest remotely, same as CBK government security. So you can diversify. So let's say if they have 10 million Kenya shillings and they bought an apartment that is giving them some rental income, the next 10 million maybe they can put in government bonds. Yeah. Because the difference is that while for the 10 million for the apartment, you spend it first, then you start getting, let's say, 50,000 Kenya shillings per month till it reaches 10 million. For the government bonds, by the end of year one, you already have 1.3 million. You already have your money. Yes. Wow, lovely. Yeah. That's good advice. So that's key for them to look. And also, when you look at Kenya in terms of foreign exchange income, actually they're number one. Diaspora. So there are people who we take them seriously, so they should also take a keen interest in investing in Kenya. Absolutely. Yes, yes. Fund startups, they need to do more for Kenya because the inflows that come. Yeah. If you have over 3 billion Kenya shillings coming from diaspora, why do we complain about our startups not being funded by poor sitting in the US or Europe? They have their own problems. 300 billion is a lot of money. It's a lot of money. People celebrate startups getting $1 million. What is 100 million Kenya shillings to 300 billion? So we really need to sit together. Yeah. Yeah. As Kenya and see that the opportunities are here. Yeah. We need to help each other because we have the capital. Wow. And diaspora people can play a big role in that. Yeah. Very true. Very true. Esther Kim, very informative. How does one balance investing while paying off debts? Yeah, that is key. Actually, paying off debt is actually investing. Yeah. Yeah. Wow. So you're investing in yourself so that you can have at least... yes, because debt tend to have higher interest rate than investing. So it's very important that you look at debt and find ways to manage it. Yeah. There are ways where you can look at you having, let's say, a mobile loan. You can consolidate and push that to a circle loan, which has lower interest rate. if you have several debts, you can consolidate them in the account that is attracting the lowest interest rate in terms of repayment. So debt payment is very key.
Very key.
And the first process is actually accepting that you need to do something about it. Because usually, you know, like the phases of grief, there's denial, there are so many things. Giving up is also there. So first you need to accept, then you write down all the debts that you have, where they are, the interest rates, the repayment dates, and you also need to know the consequences of not paying debt and write it there. That it could cause you a lot of stress. It could cause you to be listed on CRB, and let me tell you, being listed on CRB can affect your employability and your ability to get funding as a business.
You don't want to get there.
So write also those consequences, so that when you look at it, you know, I don't want this. That's the reason why I'm paying my debt.
Absolutely. John Katana, can we get the whole interview on YouTube? Yes, Bizna TV, just check it out. It will be right there. Nobody's removing it. Leah, Esilaba. Robert, the yo-yo part hit me deep. Absolutely.
Yeah, you are on your own. If you have an emergency, let's say, let me give you an example and see. That you've always wanted to meet President Uhuru Kenyatta. And let's say he's coming to your hometown, and he's going to call you once he reaches your hometown. And then your phone breaks now. That would just become an inconvenience if you have an emergency fund.
Absolutely.
You go to the shop, buy another phone,
Yeah.
meet the president, the person that you've always wanted to meet. But if you don't have an emergency fund, it will become a very big problem for you. And there are so many life scenarios where you just need money to sort it out. It's just an inconvenience and not really a problem. Yeah, so that's why we say that time now you are YOLOing, now you are yo-yoing. You are on your own.
Okay. There's a Bonge Nelson. Would you prefer bid bonds over treasury bonds or Bitcoin? Wow. I don't know what bid bonds are, but would you prefer bid bonds over treasury bonds?
So I'd say that in the capital markets, talk about treasury bonds.
Yeah.
Yeah, so those are available if you have a long-term investment horizon. And for Bitcoin, you should know that there's no clarity in Kenya. So that's like the highest form of risk here in Kenya.
Yeah.
And if you are to do it, maybe not more than 5% of what you own. But just know that you're also likely to be in problems. So usually I see people having problems and now complaining on Twitter. That's why I say you need to understand financial markets 101.
You need to.
Understand what CBK says,
Yes.
how investment banks work, so that you don't create problems that are not there. You can't say that a bank has blocked your crypto funds, but banks are not allowed to bank crypto accounts. So it means that there's an understanding problem there. So once you understand financial markets, you'll know where to go to get what. So that's key.
All right. Thanks a lot. Samir Munish, Munshi, thanks a lot for, he's watching and he has said thanks a lot for the advice that you've given in. There are more as well. My goodness, and it's already past 9. Anto Karamajong, loving the show, you all. Is it worthy investing in dollars? I don't know why you put this, but investing in dollars in an MMF in Kenya. Probably what are the pros and cons in this currency investment? I think the idea is investing in dollars.
Very, very good question.
Yeah.
Very good question. So usually I tell people that we need to live in our generation. Yeah. Wow. Living in your generation rather than country will open your eyes and you become very open-minded. Because to be honest, if you just look at your personal budget where you spend your money, you'll be shocked to find that a lot of things are imported. Yeah. And we also export stuff. So the world has become globalized. Yeah. And that works to advantage of some countries and to disadvantage of some countries. Yeah. So like us, we are in a disadvantaged position whereby we are net importers. Yeah. So that means that our Kenya shillings will always have pressure versus the dollar. So actually investing in dollars is wise from a long-term point of view. Yeah. If you look at 2020, the dollar was exchanging at around 101 Kenya shillings. Now it is at around 105 and it even hit 108. So if you are importing stuff, it would make sense to have some of your savings in dollars. In dollars, absolutely. And even just generally, as an Abojani community, we like to level up. So he said that if you're in a community, you can have a personal goal of having at least $1,000 in investment. 1,000, only 1,000. Yeah, that's a good one. Yeah, that's a good one. So it's important because if the Kenya shillings keeps on depreciating, then it is to your advantage. So you can put part of your portfolio in dollars. Yeah. Okay. Joe Moriuki, thanks guys listening. Thanks a lot for watching. Geoffrey Nanyuki, thanks a lot. He's watching from USA. Pastor Jeff,
He says, please talk about cryptocurrency. And let me just get one more. And Boshengur is watching from Qatar. Beautiful. So what do you say about cryptocurrency? Because now that was the last question that I've picked there.
So I think what a financial advisor will say about it is that there are wildcards. Just like we normally hear those stories of Apple as a company, for example.
Yeah.
Since 1994, it has given investors returns of over 15,000 times. Yeah. So it means that it is a wildcard. So wildcard, the way they work is that if you have to invest in them, first of all, you have to decide if it is a risk that you can take. But if you have to, then you need to look at not putting a substantial amount of your income.
Okay.
Yeah, because things can go either way.
Yeah.
So we also have companies that were worth over 200 billion US dollars, like Yahoo and AOL, but now they're being sold at around 3 billion or 5 billion.
Wow.
So it can go either way.
Yeah.
Yes, so it's very important to know the kind of risk that one is getting in, and also understand your country and what it says about such investments, because things could go wrong for you and you'd never be able to get back your investments.
Very true. You're right. And just on YouTube, Kevin Wambungo, thanks a lot, good conversation. Peter Mwangi as well, thanks for watching. And even Milimelo, thanks a lot for watching, guys, on YouTube. Now, we're about to close, but I have to tell you one of the questions that I've seen asked is how can people get in touch, or how can people join the Abojani? And so I would like you to, sum it up by where people can find you if they want to really find you.
Yes.
And of course, just bring in your parting shot by telling us, first of all, what you guys are doing at Abojani. In fact, I should have started there. What are you guys doing for people, and how can people reach you?
Yeah, so basically what we are doing is that we are helping individuals connect their personal goals, their personal finances with their life goals. Yeah. Wow. So whereby, like we said, you have a meeting with yourself, you decide what you want to do, then you tag us along. We'll be that silent person at the dinner table whenever you're having dinner, whenever you're having those problems about money as a family. And we believe that personal finance is a value chain. It's not just about saving and investing. It's not just about cryptocurrencies. It is a whole value chain that starts with financial planning. We have wealth management, risk management using insurance products. We have debt management. We have estate administration and succession planning. Finance for kids, finance for couples, home ownership. So you need to look at your personal finance as an empire, that even just one problem like debt management can bring everything down. Yes, and not teaching your children about finances can be a problem in the years to come. Once you're a billionaire, they start fighting you that, Daddy, I want my inheritance now. I can't wait any longer. Or couples could fight over money. So when you look at it as a value chain, then Abojani can partner you and help you to drive towards your goal.
Wow.
Yes, and we want to reach as many Kenyans as possible. Having worked at Equity Bank and GT Bank, I've seen that Africa, we need to look at solutions that help Africans and the masses. Yes.
Okay. Have you told them how they can get you?
So how they can get me? Yes. Our Twitter handle is the Abojani.
Abojani.
The Abojani. Facebook, we are Abojani Investment. And you can always reach us through learning@abojani.com.
By the way, when we just Google Abojani, there's no other.
Yes, just Google Abojani. There's no other Abojani.
Alrighty, so I want you to give us your parting shot, but oh goodness, I feel like this is unfair. There's still some questions that have popped in here. I'm going to throw you, but try as much as possible to answer it in the shortest way possible. Monica Waidaka, loving the show, eye-opening conversations there. Investments or savings? Ah, what a question.
Saving happens in your mind, then as the money goes to CIC,
you're investing.
You are investing.
Yeah, go back a little bit, you'll find out. Absolutely, make the decision. John Katana, what are you saying? In terms of risk and returns, which product comes after money market? In terms of risk and returns, which product comes after money market?
Real estate, then the stock market right there.
Okay.
Yes.
Good. There you have it. Straight to the point. Now, parting shot, my guy. I'm even calling my guy because, I think this is somebody who just gives you a lot of information like this. Is just your guy. He's really helping you out.
Where's the camera?
Right there. Just put it that way. I'm sure we're able to see that.
I hope you can see how colorful this is. This is what we want to make finance to everyone. Because we need finance for sustainability. Kenya needs to handle its finances well to sustain itself. Households need finance to sustain themselves. Corporates need they need finance to sustain themselves.
Okay, just give me that book.
Even
I think it would be
non-profit
better
organizations.
if I hold it from this end so that at least we can
Yes.
have a better
So what
view
we are
of this.
saying is that
Yeah.
we are going to make learning finance colorful,
Yes.
interesting,
Uh-huh.
engaging,
Uh-huh.
and humanized.
Yeah.
Yes.
So I can see very colorful stuff here. So that means it also looks very simplified, isn't it?
Yes, yes.
Yeah, very simplified from this
So finance is the language of business for
Mhm.
those who are in business.
Yeah.
And for individual, we
Yeah.
say that finance is your silent life partner.
Okay.
It will partner with you and help you to meet some of your life goals
Yeah.
so that can live a fulfilled life.
Oh yeah, now we have a very clear picture there. You have it. Some very nice. Let me just flip some. Can I flip some pages as well so people
Yes,
can
yes,
see
you can.
a little
yeah.
bit?
Yes,
There
can
you
see.
have it.
Yes,
Yeah,
yes.
beautiful
yes.
stuff
It doesn't
there.
have to be the most boring subject.
It doesn't have to be the most boring, eh?
Yes, we do sessions whereby people stay
Uh-huh.
online for even 3 hours.
Yeah.
Yes, learning about money and finance.
I need to flip faster lest people start taking notes here. You better come to the class. Please,
Yes.
how much is the class?
So the class is very affordable.
Yeah.
It's only 3,000 Kenya shillings.
3,000 bob.
Yes, for the monthly master class.
Yeah.
Yes.
My goodness, these are
So
very
the
simple
next
maths
one
here.
will be in June,
Mhm.
so you can get in touch with us
Uh-huh.
and subscribe for it. Yes.
There you have it. This
So
is
if
now
you're
the
watching this
workbook.
show,
Yes.
you'll have a discount and pay only 2,700 Kenya shillings.
Hey, hold on. You have to repeat that again. What is the offer again if you're watching the show?
If you're watching this show
Yes.
and you pay before the end of the month,
Yes.
it is only 2,700 Kenya shillings.
So you get a
instead of the
discount there.
3,000, yes.
That's a
Yes.
10% discount.
Yes, because of what MC and Bizna are doing for people. These are lovely conversations. We need to have more of these so that as much as we entertain ourselves and other things, we also have times where we
Absolutely.
can build more money to even go for holiday in Dubai or other places. We level up.
Goodness. To
By-
all the hundreds who are
Yes.
watching, please go in there, check it out. In fact, you should throw in a comment that you're taking it up so that you can have proof that you are watching live, you know. You have a discounted, I mean, honestly, 2,700, some of these, that's what you take in a day, wherever you go. You better invest in yourself right now, you know, very important. Thanks a lot for that offer, you
You're
know.
most welcome. Yes,
Yeah.
we're making the course affordable so that as many Kenyans as possible
Yeah,
can take advantage of the opportunity and learn. And in our community, you also have like-minded people.
yeah,
You know, people rarely talk about money. So imagine joining a community that is like a golf club where people talk about just money and investing.
yeah. You know, I want to end the show now.
Yes.
But you know, they say sometimes blessings falls to the people who are closest, like the ones who are online now, they've gotten discounts.
Yes.
Of course, I want to say that for me, because I am also an advocate of Abojani, I'm going to get a better discount. Thanks a lot for your time here, definitely.
Thank you for having me, and
Absolutely.
thanks to Bizna as well.
Yeah.
Yeah, for
I'm
the
sorry
opportunity.
I made you talk a lot. You didn't even have time to maliza your tea.
We'll manage
but
it, yeah.
I'll ensure you go home with something from Melvin so that at least you can enjoy. As
Thank
well.
you,
Is
thank
it?
you. And I love the brand Melvin. Yeah, I
Yeah.
know them from our entrepreneurial community.
Oh,
So I love
you've
what they're
interacted
doing.
with
These are
them.
good stories. Yeah.
Beautiful. There you have it. Thanks a lot. But I wanted to end with this statement here. Somebody that hit somebody hard. It's no longer about YOLO, you only live once. It's now about YOYO, you're on your own. So you better make choices that will help you in your personal journey. And I hope you've gotten something for you to invest and make wise choices when it comes to your money. Thanks a lot, and salute to Abojani. There you have it. You got discounts for the course. I mean, because you were watching. All the best in your investment journey. Bye-bye for now. That's it here on Biz Talks.